Wall Street closed sharply higher on Tuesday as fears of a banking crisis abated and investors turned their focus to the Federal Reserve. The Dow gained 1%, the S&P 500 climbed 1.3%, and the Nasdaq jumped 1.6%. Much has changed since Fed policymakers last met. A 1-2 punch of regional bank failures, the rescue of First Republic Bank, and the takeover of Credit Suisse. Now, Fed Chair Jerome Powell and team will have to balance fears of more damage to the banking sector with their original mission, to defeat inflation. And while markets have priced in an overwhelming likelihood of a 25 basis point rate hike, Christian Ledoux, director of individual securities at Cap Trust, says a pause in rate hikes should also be on the table.
Now, the reality is that the banking situation is actually disinflationary, as banks are going to be responding to this by loaning less and being a little bit more conservative. So that may play into the Fed's ability to pause in the short run, and thus maybe is a catalyst for stocks to go higher.
Shares of First Republic saw their biggest ever one-day percentage jump as J.P. Morgan Chase CEO Jamie Dimon led talks with other big banks aimed at investing in the lender. Peers PacWest and Western Alliance also surged.
Our intervention was necessary to protect the broader U.S. banking system.
And Treasury Secretary Janet Yellen on Tuesday reiterated that the U.S. banking system has stabilized, but warned more action from regulators might be needed. And in other market news, Tesla jumped nearly 8% after it appeared on track to report one of its best quarters ever in China, likely thanks to having been the first electric vehicle maker in the country to cut its prices in order to defend its market share.
I believe that our actions reduce the risk of further bank failures.
U.S. Treasury Secretary Janet Yellen said that the country's banking system is stabilizing, but further steps may be needed to protect depositors if runs on other regional banks threaten contagion.
Our intervention was necessary to protect the broader U.S. banking system. And similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion.
Her comments came Tuesday at an American Bankers Association conference, more than a week after the Federal Deposit Insurance Corporation, or FDIC, closed the failing Silicon Valley Bank and Signature Bank. Yellen said she believed the actions of the FDIC, the Federal Reserve, and the Treasury had reduced the risk of further bank failures that would have imposed losses on the bank-funded Deposit Insurance Fund.
Let me be clear. The government's recent actions have demonstrated our resolute commitment to take the necessary steps to ensure that depositors' savings and the banking system remain safe.
Yellen did not provide details on what further actions may be warranted. She said that the current situation was very different from the 2008-2009 global financial crisis, when subprime mortgage assets put many banks under stress.
We do not see that situation in the banking system today. Our financial system is also significantly stronger than it was 15 years ago.
Yellen did, however, add that in coming weeks, regulators will examine the failures of SVB and Signature Bank and re-examine whether current regulatory and oversight protocols are appropriate for the risks that banks face today.
Tesla could be about to report one of its best quarters in China. That's what the latest retail sales data suggests. The carmaker's Chinese retail sales were close to 107,000 from January to March 19th, or more than 1,300 per day on average. That's according to figures from China Merchants Bank International, which tracks car insurance registrations. It comes after Tesla became the first electric vehicle maker to cut prices earlier this year. Elon Musk's company did this to try and defend its market share. The US automaker cut prices of its best-selling models by up to 13.5% in China in January. That led to a price war with rival Chinese EV maker BYD. Several other competitors also slashed prices following Tesla's move. Tesla's pace of growth has not caught up with BYD yet. The firm outsold Tesla by more than 5 times in the January to February period.